So I want to quickly do this video and share with you some trade signals that you can take immediately. I also want to explain how to use the WELDDS macro tracker. Somebody asked me a question in my group. Looking at this tracker here, you see that this area explains the overall economy of the countries that we are analyzing. So we have US. When we look at the overall rating, the US still remains the strongest economy because we are comparing the GDP, the inflation, unemployment rate, retail sales, all the macroeconomic data, and when we rate all of them, US still remains the strongest. If you check here, improving conditions, it shows you how the country is performing compared to how it did last month. Okay, so if you look under the improving conditions, you can see that compared to the month of March, Switzerland has improved more significantly than any other country. So you expect the Swiss franc to be performing better than any other currency because we are trading in favor of the one that is improving, not the one that is just static. Okay, and then another currency that is beginning to pick off is euro. Okay, so you can see euro is strong, Japanese yen is strong, and Swiss franc is strong. For currencies like New Zealand dollar and Canadian dollar, compared to how they performed last month, they have not really changed. Okay, however, you look at US dollar, it is dropping in rating. Although overall economic condition, it is still the strongest. So looking at these conditions, you can see that for a currency like USD CHF, you should be selling that currency pair in favor of the Swiss franc. For the euro pound, you should be buying the euro pound in favor of the euro. If you come to the chart and look at a currency like the euro GBP, you can see here that the tracker showed us that the euro is strong, okay, and we should be trading in favor of the euro. You can now see here, if you look at it, it was trending down for some time. Now it has broken out of that trend line. So this shows you that the tracker actually gives you the direction of the market. So if you're going to take this trade, you can come to the 4-hour time frame and wait for a trading setup. If you had already traded from here, that would have been a good time to enjoy your profit. Okay, by now you should be closing it out. But what you can also do is to wait for a significant retracement, and then you can continue to ride in that movement. If you take the Fibonacci retracement and measure from the beginning of that impulse move down to that level, you can rightly wait for this currency pair around the 61.8 Fibonacci level. Okay, so if the market retraces to that level, it is going to be a good trade signal for you. When you take the trade, where can you target? If you are going to be swinging this, you can trade back to around this level, which is a good one, 0.8618. If you look at the other currency pairs like New Zealand dollar against Swiss franc, you can see what this currency did. If you check from our rating, look at where the Swiss franc is and look at New Zealand dollar. You see that the Swiss franc has been acquiring strength, it's been improving in the economic conditions. So when you come here, you see this big movement down. So what can you do if you were unable to catch this trade? What you will do is to be patient and wait for a pullback or a correction back to this zone, and then you can take that trade. This is actually on the daily time frame. If you go to the 4-hour time frame, you can see that the market is actually going, but many times it might not go back there, it might just continue. If that happens, you can rightly stay away from the trade, but wait for it to come back there. Another currency pair like GBPCHF, this trade was one of the trade I took last week that messed me up because I did not look at the tracker. I tried to catch this movement when it came back to this support level. I wanted to catch it from here and move. It did not take that point. When it came back to this zone, I also wanted to catch the reversal from here. It didn't. So what has happened now, if you come to the daily time frame, the market has blown badly, broken all the levels that we were even looking. Even this level, it has broken and now is tending back towards this area. So that is to show you that the Swiss franc actually is performing as the tracker showed us. All right, what I keep telling people, you should not ignore the fundamentals. The fundamentals tells you the overall direction of the market. If you look at all the Swiss franc pairs like AUD, CHF, the same thing happened. I was actually waiting for it to come back, that it didn't. So it kept on blowing down. So you can wait. This week we might not see a lot of trades. Maybe by next week or any other time, this market is going to give you so many trading setup on the Swiss franc, because this trade has already happened and you should expect that correction before you continue. Euro CHF did the same thing. For this particular currency pair, you know, the euro is also doing well and the Swiss franc is doing well. You know, you would expect a kind of turbulence, but it has continued to drop. Maybe if it drops to this zone and shows you reversal signs, you might trade along. The Swiss franc continue to be very, very strong. CHF-JPY. For this currency pair, you can see that all the Japanese yen pairs are bearish. But to tell you that the Swiss franc is actually acquiring strength, you should see this. All the Japanese yen pairs are bearish, but this is bullish in favor of the Swiss franc. So the market has blown up to that level, came down here and continued to move. So if you go to the 4-hour time frame, if you take your Fibonacci retracement from this level down there, the market can come back to this area and then you will see the setup to long. Now there are two currency pairs I want to give you right now, which I think they are ready. If you look at GBP New Zealand dollar, this currency actually is one of the currency that I am looking at taking today. I've already taken some of them, you know, but not full position, right? So the market has been in an uptrend. We took some trades here, made our money. Now you are seeing a clear setup. The market got there, dropped, and then pushed to that level. Now it has come back to the entry zone. So if you're entering this trade there, you know, you can keep your stop loss somewhere below there. Another way of looking at this trade, you can also come to the daily time frame. If you want to be very conservative on this trade, you can take this trade from this level. If you take from here, you can wait for the market to drop to the 61.8 fib level on the daily time frame. So if the market drops to this level, which is the 61.8, or it drops to here, those are very solid points to take the trade with peace of mind. However, if you come to the 4-hour time frame and you are going to be taking the swing that you see here, you can also measure from this level here, okay, and take the trade where it is, because it has already hit the 61.8 fib level. Stop losses below that level. You can ride the profit back to this level here. So if you are taking a long position from this level, which is the 61.8 fib level there, then you should ensure maybe your risks down there and then take profit targets around here. Okay, you can also reduce this to give you a risk reward ratio of 3:1. Then if you go to 1-hour time frame, you can refine the trades and get a better position. So it has already started showing signs of reversal there and it's coming back. That can be a nice place for you to execute the trade. If you are taking the trade right now, you can execute there and then watch out for what will happen on that trade. Then we are seeing something like the euro US dollar. The euro US dollar, from what we have on the tracker, you can see that the euro continue to be acquiring strength. Then the US dollar is actually not doing much this new month, coupled with the fact that Donald Trump keeps threatening people with tariffs and counter tariffs and additional tariffs. Okay, so you can actually take this trade from where it is. If you are coming from the 4-hour time frame, you can see this trade looks good, actually looks good to me. So if you take the Fibonacci retracement from this level and measure it all up over there, it has come to the 50% retracement. However, if you're taking your measurement from this level, it actually hit the 61.8 balance there, and it is beginning to show you signs that the buy momentum is beginning to kick off, right? So that was a good entry point. Okay, so if you have already entered the trade already, or if you have not, you can look for some confluences or break of structure on a lower time frame to join that trade. So those are the trades that I have observed. If this video was useful to you, I want you to click the subscribe button and be a part of the community. If you have any question, please ask it in the comments. Okay, if there's any currency pair you would like me to analyze, also drop it. I'll be glad to assist you. See you tomorrow with another video.